Alright, welcome to Advanced Model 2. So yeah, we're talking about trading plan and trading journal. A trading plan is a set of rules that tells you certain things. Now, this is, they tell you when you're trying to achieve something, you need to have a plan towards it. So that's why a trading plan is something that you need to put in place to keep you in order. So it tells you basic things like when to enter and exit a trade, what to reach, maximum allowed lot size. It's basically based on the preference of the trader and also mixed with the proper discipline criteria. You get now you are being given the normal discipline template of it's not good to risk more than 2%. It's not good. You get so you can now mix it with your own personal criteria and preference. You get so it contains certain components like pairs. You get the because I feel like traders don't need to trade everything. You get although there are tons of traders that trade different pairs. You understand, and it actually makes them a lot of money. But I stick to just 3 pairs. My trading revolves around those 3 pairs. So if you're somebody that you do not like, to just pick, you basically just have a structure of pairs you visit. It keeps you familiar with the pairs, helps you spot repeating patterns. You'll have seen a particular move before, and you'll be able to know that okay, this is how the move happened. You get, and I'm thinking that it will likely repeat itself because, of course, we're technical analysts, and history is bound to happen again. You get so, and the only way you'll probably mostly be familiar with all of this is if you are limited to certain pairs. But if you're trading like 10 and more, you might not really have the idea of, because even if you were to remember, you won't be sure of the particular pair it was on, except you now started to go back to check your data and everything. So session, all right, you don't want to be trading, you don't want to just wake up, pick your phone and trade, like not even thinking about what the time is. Right now my trading window is closed because I trade between 7 in the morning to 5. It's basically just the whole of London session and part of New York section. You get, if you're somebody that you're busy during the day, you can try 9 p.m. You can try the Asian or Tokyo session depending on you. So now confirmations, right? So you, according to your trading analysis or trading edge, you would have a bunch of confirmations to allow you know when to enter a trade. Maybe before you take a trade, you have to wait for liquidity to be taken out, or inducement of these, or the Fibonacci to be verified. You get tons of things that actually boost your confidence in taking a trade. You have those things. So now, what's the least confirmation that would, okay, let's say you have like 5 confirmations, and then you're saying if you can find at least 3, then it's still a good trade. You get so, but then if you're saying 2, out of like 5, you only saw like 2, and according to your trading plan, you need to see at least 3. You understand? So you know that when you see a trade with just 2 confirmations, it's no trade you want to take, even if it eventually plays out. You understand? So now this helps with your discipline and keeps you in check. Now risk to reward ratio, and sometimes I won't say it's okay to have dynamic risk to reward ratio. I actually prefer having a fixed reward ratio because it's okay with, like, it's very easy for you to calculate and plan your way out of the market, out of challenges you get. It's very easy for you to just rationalize it that okay, all you just need is so percent and then you'll be done in so time. You understand? Risk to reward ratio. Now I'm somebody that I have a fixed reward ratio of 1 to 2. Now I believe that having a fixed reward ratio and also having a dynamic risk to reward ratio is actually very okay. Like, I mean, maximizing your opportunity in between the two. So now I always do top to down analysis. So if I see a trade that might play out more than I even expect it to, like there's a tendency for this trade to play out, even maybe because even there's a news that might even support it. You get, so let's say I took that particular trade and I'm up 1:2 in risk to reward ratio. I might just close 50%. You understand? Set my stop to break even. It's not a risk-free trade, so I'll not allow the other 50% to run. So even if price eventually goes against me, all right, I won't be losing anything yet. So I ended the day with 50% of my position, which will probably just be 1 hour. You understand? So that is basically how to just move your way in between the dynamic and fixed risk to reward ratio. But overall, I still suggest having fixed to reward ratio. If you just have a trade, you just have a basic trade that you're just seeing on the lower time frame, just take it 1 to 2, you're done, or 1 to 3, depending on your edge. Alright, max trade per day. Now, even if all the trades I take are wins, alright, I always have a three maximum trade in a day. I can only take three maximum trade. I can't take more than that. Right? This helps me avoid over trading and unnecessary trade. And sometimes you're not even supposed to take that trade for in this. So allowed loss per day is probably to me I risk 1% per trade. So the allowed loss per day in the normal basic form will be that two losses, right? That's basically just 2%. But at some point, I might have a very important trade that I do not mind risking my allocated 2% of that day on just that one trade, right? But it's not advisable for beginners. Beginners are meant to just risk 1% or even lower. You get, but depending on my experience, so if I find it that that setup is very interesting, I might feel very willing to risk the whole thing. And if it does not go in my direction, I will know that what I'm done for that day, alright? Because I've exhausted the power I have for that day according to my plan. So a trading plan will help you know when and when not to trade. You can say, okay, when there's bank holiday, you're not going to trade, and you want to say when there's this, you want to trade. Maybe when they're releasing news, you don't want to trade. It helps you shuffle it, alright. So it keeps you in check. So you don't just start taking unnecessary losses or chopping backlash from the market as just basically just keeps you safe. Let me put it that way. So time frame, right? You can't dabble through time frame as a trader, and the type of trader that you would be, it has to be a time frame you stick to. Personally, I go between the 4 hour to 1 hour to 15 minutes and sometimes 5 minutes, right? But like that's all you see me going through on a normal day to day. But if I'm trying to do a top-down analysis, I may stretch my hand to the daily, sometimes the weekly, sometimes to the monthly, depending on what day or time it is, right? And you also have to make a promise signature. Now, when I did my first trading plan, I signed on it electronically, and I saw to like I swore, or should I say, you get like you're making a oath to never break any of the plans, right? So you just sign. It's not really a big deal, but if you were something to like, if you stopped this thing, you would be able to like become a better trader over time. Okay, so the contents are very flexible, right? They are adjusted from necessary components to optional ones, especially if that particular trader needs this. You get, so the trading plan, there are certain things that a trading plan will actually include, like pair section, most of which I've listed, right? Now, you personally as a trader, if there's something, it is said that what the things you want to change in your life are the things you pay attention to. So if you're paying attention to your trading and you're seeing that there's something that is maybe having an issue and you just want to correct, you might end up like, you might just want to like add it to your plan that, okay, you think maybe if you take trades in the afternoon, it never like eats your TP. So you can say that any trades that you would see after 12 p.m., you're not going to take it. You get, there was a time I did it like that until like I used to think it was I just used to think it was magic, or like it never really worked out. Like maybe New York session never really worked out for me. But after a while, I was able to program it, and I felt so safe removing that trade, that particular rule from my trading plan, because to be honest, it was a limit, right? Like it limited me, but just to keep me disciplined over time. And when I felt like I had already mastered what I needed to do, then I removed it. So now I'm able to trade 7 to 5, and I find good trades. I'm not really confused. Most of my trades sometimes it's that even now it's CPI I found in the afternoon. So it's that crazy. So then importance of a trading plan. A trading plan will define your risk, right? You would have known that this is what you can only allocate for a particular trade or for a particular day. So it defines it, so you know that, okay, for this, even if this day goes worse or if you lose this day, you know that your account is still like safe. So it stops emotional trading. That means that you know when to enter the trade, when not to. Imagine you decided to trade when there was news, and you are not supposed to trade when there was news. You understand? So maybe because of the volatility, you see, maybe the structure of the market is bearish, and the news is supposed to like actually follow the structure. But because of that news volatility, market just spikes up first. You get confuses a whole lot of people, and you are thinking that because it's news, you get that it has the power to overthrow structure and all of that. And then you just jump in and it just dumps like immediately. You get, so all those things are emotional trading. You get, then it keeps you consistent. Even if when you're losing streaks will happen, all right? And your trading plan is what will just keep you on the line, all right? You just know that this is what you need to do every day. It's more like I'll call it a script. All you have to do is do this, do this, do this, this. If you don't see this, you don't do this. If you don't see this, you don't do this. You get like a script, and over time, just give yourself time. The if you don't have a strong psychology, you might lose your mind when you're going through losing streak. In fact, that's where most traders break, like give up. It's not easy, to be honest. Well, like when you're going, and it's not as if you don't win. You understand, but the way those losses will be coming, you'll be shocked yourself. So no random entries and exits. Now you immediately get out of a losing streak. You get, I feel like a losing streak is a normal thing that traders should now adapt to. Get, you know that you would have already sensed it when it's happening, but it's something that I hope doesn't continue. You know, you should. That's why you need to backtest and do all of that to be able to avoid losing streaks. Because to me, I don't even still think it's normal. Yeah, it's not normal to lose. You know, it's normal phase of life. To go through downs and up. But I just hope you get what I'm saying. So no random entries and exits. Then it helps you to avoid over trading and revenge trading. So now that I have a max cap trading limit for the day of 3, and I can't trade more than 3, you get. So if I'm now taking 5 trade, that's over trading. So over trading is very exhausting. I don't know why people even do it. Like, it's exhausting, especially when you're day trading. Yeah. So you mostly just sometimes be sparing, or maybe you're a scalper, staring on a chart, having to check this pair, check that pair. It's exhausting. And I don't even know how people even get the psychology to even keep on doing it. Revenge trading in itself is exhausting. Lost, and then you thought that maybe it's an opportunity for you, and then you're like, at the end, you're just taking a calculated risk. But low-key, you're just revenge trading because you cannot sit down and accept that you lost. So you want to win it back only for you to lose again. So it happens that way. Now, this is an example of a trading plan. This is mine personally. So I'm a day trader. These are the time frames I move through. I trade the London session, early news section, that's 8 a.m. to 5. I have a fixed rate ratio of 1 to 2, max of 3 trades a day, max of 2 losses a day. So my trading style is every new month, alright, I go on the monthly time frame just to see how the last monthly candle ended. It gives me an overview of how I expect this month to be. And every new week, I go on the weekly time frame to see how maybe the last 2 candles or last 3 candles of the week, just to give me an overview of what I expect this week. So on the H4, just I'm trying to know the direction, the trend of the market. So I go to my 1 hour to find the current structure. That's where I'm now starting to position myself. And then I'll probably find my candlestick entries on 15 minutes. Sometimes I find them on the 1 hour as well. You get, or 5 minutes. So now this my trading entry criteria: hold support, only resistance, and vice versa. Trend line, sharp patterns, candlestick patterns, Fibonacci. You get. These are just my confirmations for trade. I trade basically just structure in the simplest way ever. So that's it. Then you have trading journal. A trading journal is a record of every trade and what you learn from it, right? Something to keep you in check, right? You reckon the bad days, reckon the good days, and seeing how it goes. So I think of it as a diary. You get, how a diary is now. It doesn't matter if you're feeling bad or good, you always write it at the end of the day. So it has so many components, like pair. Okay, that particular trade, what pair did it trade? Was it XA USD? Was it Euro USD? What time did you take that trade? Was it in the morning? You want to know maybe if it was out of your trading window. You understand? So the dates and the day. The result of the trade, was it a win or a loss? How many confirmations did you see before you take that trade? Then through trading view app, you want to have a before and after link. Like, you want to have it saved so that even if when you're over reviewing your trades again, you can see you can see how the picture was before you took the trade and how it was after. Maybe it can help in even spotting your mistakes, right? So results of the day, how did that day end? Yeah, did you end up winning overall, or it was a losing day? So the importance of trading journal is that it exposes your mistakes, alright? And it's very good. It helps you know what's going on, yeah, and helps you spot it on. So it shows what is working and what is not working. Alright, it's basically just data. Alright, so putting in the right data, you'll be able to even know that okay, like I said, Forex has a very deep mathematical understanding. Right, so if you understand statistics and how data works, you understand that you can actually be profitable if you're able to prove a data that is profitable, a real data, not a fake one, like you were being sincere or true. I mean, like if you can prove it to the data, there's a reason why we have those data, because it's meant to help your psychology. So if you can see it on paper that for the past 30 days you did the right things and you still came out profitable, right? This, and you repeated it again over a certain period of time. So it helps you to know where you are right, where you are wrong, and stuff like that. So it helps you to build discipline, because after taking every trade, you must record it, right? That itself is discipline. So consistent over time, it becomes an habit and something you do, and then it helps to improve your strategy over time. There was a time I was trading. I was recording my trades, and after like 3 weeks into that month, I didn't realize that my win rate was 50%. I was like, okay, that's chill. And because my win rate fluctuates between 40 to 50% most times, I like, it's okay. Only for me to discover that every day I had a loss, the following day was a win, and after that win, the following day was a loss. After that loss, before it just kept on repeating itself that way. And I was wondering, and that particular day I just taken a win, and I was like, the following day might be a loss. You understand? So it's just probably just that. But the following day wasn't a loss actually, because I now decided to pay more attention to that day to try to see if it was going to be a loss. So like, because it was no a normal come to the chart, find trades. It's something I discovered that this next day might be a loss, right? So it's something that I did. It doesn't mean that I should now like skip that day. Alright. In fact, to post to you, that day was a very significant trading day, and made me tons of money. So I think that's all I have for the importance of trading journey. And this is an example of how my trading journal looks like. You have the dates, the pairs, the time, the orders, the results, the percentage before the trade, after the trade. These are the trading view links. If you tap them, you will see what happened, like how the picture was before I entered that trade, or maybe at the start of the trade, you understand, and at the end of the trade you get whether it was a loss or a win. There's a link you get, you just paste it on your browser and it just pops up a picture. So you can see for this day I traded 2 pairs. This was the time I traded them consecutively. So the others were buy and sell. The result, one was a loss, one was a win. You get. So now if you're starting off, all right, your trading journal should be a little bit lengthy than this, but I've been deep. I've spent a couple of years in the game, and I feel like these are the only information that I need to pay attention to. As you grow eventually, you will know how to shift it and shuffle it to make things more simpler. So and then I think this particular area was a month. You get, that's why I have 2 lines here. So I think I started trading that account at close to the end of that was May. So I ended that week -1%. So that means I ended that month -1%. And then the following week, that was the first week of June, I did 9%. Following week I lost 1%. The following week I did 8 again. So it was all, there are good wins, losses and all of that. So this is an example. So you can just shuffle it between how you feel it. So a trading plan keeps you disciplined, and a trading journal makes you a better trader. That's just it, right? So a trading journal keeps track of the data that you need to pay attention to, and a trading plan just keeps you disciplined, keeping your hands from what you should do and from what you should not be doing. So I think that's basically just it. This brings me to the end of trading plan and journal. So I'll see you on the next one.